Hey guys, welcome back to another episode. Today we're going to be looking at a dividend stock that is a very popular dividend stock. That is going to be Verizon. And AT&T also has some say in this as well, but there was some big news that just came out today, and I think it's really going to affect the dividend. So we're going to go ahead and jump right into that and see what we're looking at. Okay, so I went ahead and downloaded the article that I found. I'll link this in the description too if you guys want to go ahead and take a look at it. But this was on Seeking Alpha this morning, and I thought it was some pretty big news, so I wanted to get it out to you guys. But basically, it's about Verizon, and so I highlighted some of the things I think are the most important from this article. But you can see this is going to be coming from Stone Fox Capital. I don't follow this investing group too much, but maybe they're good, maybe they're not. I don't know. It was a pretty good article. And you can see that they're saying that they want to hold Verizon. Okay, so the last price we see was at $33.27. Ticker symbol VZ, and so they want to hold Verizon. So let's go ahead and look through this. So first off, we can see that Verizon is facing a lot of liability issues from toxic lead cables. Okay, so these cables are usually underground, but they can also be above ground on telephone poles as well. And so there's a lot of safety concerns with lead, as we've seen throughout history. So we can also see that throughout the year, Verizon has gone down. We're going to actually look at Verizon's charts after today. I intentionally made this video after the end of the trading day so that we can see just how much Verizon fell from this news and kind of how it's been doing throughout the year, which has not been very well at all. Okay, and so we can see that this could potentially end up offsetting their 7.7% dividend yield. This is a very high yield. Anytime you see anything really above 5%, this could be a little alarming to be investing in. But Verizon has paid a stable dividend, which we'll take a look at in the future. So again, I'll have this linked in the description if you guys want to check this out. I'm just going to kind of go through it quickly here. So we can see that through an investigation, we see things like places like AT&T and Verizon and Lumen Technologies could potentially face huge liabilities for these toxic lead cables that were left underground, under the water, and on the overhead telephone poles. Okay, there could be over 2,000 of these cables. And if tests are done within the soil and things like that, these companies will have to dig up these cables and replace them with fiber cables, right? So we can see that Verizon kind of tried to justify this by saying that lead cables are very common, and they're still used today to provide really important things like cell phone service and 911 calls and other things like that. So it's not necessarily a company like something that Verizon just does, right? This is an industry norm for telecommunication companies. Okay, so we can also see that it's estimated. Now, this is by Jonathan Chaplin. I don't even know who this is, but I mean, he's a researcher, but he's going to estimate that the cost of these cables to be removed could be upwards of $59 billion, right? So if we're looking at tens of billions of dollars, this is very alarming. And we actually saw that AT&T has already had to remove these cables near Lake Tahoe, and it was only 2 cables, and it cost them $1.5 million. Okay, and we saw that after that, J.P. Morgan actually downgraded the AT&T stock to a neutral. Okay, so that it wasn't a buy, it wasn't a sell, but it was a hold, kind of like what the author is recommending for Verizon here. So if we go ahead and scroll down here, we can also see that Verizon has a very high debt. Okay, they have a very high net debt. So in this graph right here, the purple is going to be Verizon Communications, and the orange is going to be AT&T, right? So we can see that AT&T really after 2018 had a big spike in debt, right? But we can see that they've really tried to pay off their debt this year, right? So they've been paying down their debt, so that looks good for AT&T. Verizon, not so lucky. I mean, it's really just gone up exponentially and hasn't gone back down, right? So we're looking at over $150 billion in net debt from Verizon. And when you add on top of this that Verizon is paying $11 billion annually in their dividend, this is very alarming, right? This only leaves $6 billion in excess cash that they can use to pay down their debt, but they almost never pay down their debt, as we can see from this chart from 2014 till present, right? So they almost never pay down their debt, which means that if they get sued and they have to get rid of all these cables, all these lead cables, their dividend will be cut. There's really no question about that. They're going to have to cut their dividend so they can free up some cash flow to pay for these lead cables to be removed, okay? So again, I'll link this article, but I want to jump over to Seeking Alpha and actually look at Verizon and how Verizon did today. Okay, so now that we're on Seeking Alpha, if you guys remember when that article was written this morning, or at least that's when I saw it, the stock price was just above $33, right? And we can see today that it went down to $31.46, okay? So very bad. It's trading near its 52-week low. It's very close to that 52-week low. 52-week low was $31.25. But it kind of went back up today. So we can see that throughout the day, it pretty much just went down, and then it kind of had a little spike back up, and this is where it kind of left off, right? And then we see the year-to-date. Again, it's down 21% the year-to-date, and this is before this lead cable thing. And if we look at the last 5 years, again, it has only gone down. It's down to 38%. And overall, it's down 36%, right? Ever since its creation in, what is this going to be, 1993, right? So, again, really bad, really bad. It has a very high volume, so a very high volume, pretty big market cap. And then we can look at some of the analysis over here. So Seeking Alpha actually recommends it to be a buy, a pretty stable. 3.7 is a pretty stable buy. But we can see that Wall Street and the quant trading have downgraded to a hold. They don't believe people should be buying or selling it off because, again, it does offer really good dividends. And since that's what this channel is mainly about, I'm going to go ahead and take a look at the dividends. So if we look at the dividend grades, kind of the dividend scorecard here, we can see that it has a safety rating of a C+. Now, I try to stay away from dividends that have a safety rating below a B- because you don't want to have dividend cuts. And you always want a growth company, right, when you're investing in dividends. So I try to stay away from companies like this. This is why I haven't invested in Verizon. But then let's go ahead and look at their dividend history. This is why people love Verizon as a dividend stock, right? So we can see that over the last 5 years, the dividend has actually increased throughout the last 5 years. So it's only increased. It's up quite a bit. But again, and they have been consistent. But again, this can be really misleading, right? You might think that this is a very safe dividend, and most of the time it is. But if we go back to the dividend scorecard here, we can see that it has a 7% dividend yield. And again, we kind of want to stay away from dividend yields that are too high because there is most likely a dividend cut in the future. But it has had 18 years of growth, okay? It hasn't missed a dividend payment. It's done very, very well. But this news could definitely lead to a dividend cut. So that 18 years might not be such a good thing, right? We can see that their payout ratio is 51.74%. So again, over half their earnings are paid out to shareholders. Okay, so that's also kind of alarming for a company. And again, one of the biggest things when looking at dividend stocks is you want dividend growth stocks, right? You want the stock to actually go up over time, because if it's going down over time, then you're losing that principal. You're losing the money that you originally invested in. So even though you're making a good amount of money in dividends, that could be very misleading because you're losing a lot in the principal. So that's why I would say Verizon is definitely, I would not invest in it. I wouldn't have it in my dividend portfolio. If you're already invested into it, I would hold it because you don't want to sell at a loss, really. I mean, I don't think it's going to completely kill Verizon. I mean, they're a very big company. But, you know, you are probably looking at a dividend cut in the future if they do have to remove all of these lead cables. If not, then it'll probably stay the same. But again, even the year to date, it's trading pretty low, and it just doesn't seem like a great dividend investment. Alrighty guys, thank you so much for watching. Make sure you guys like and subscribe. I do videos like this, but then I also do portfolio reviews so you can see what I have in my dividend portfolio and whether I'm trading options, what kind of options I'm trading, and it's a good time. So make sure you guys like and subscribe, and I'll see you guys in the next episode.